All right, what the heck happened just now to the stock of Veeva Systems, one of our favorites, the maker of cloud-based software for the pharma, biotech, and life science industries? Veeva helps to make pharmaceutical sales reps more effective, captures clinical trial data, and the company also makes it easier for its clients to comply with government regulations, how thick they are for this industry. It's a story that I've liked for some time, as you know. However, when Veeva reported last Thursday, the stock got clobbered, losing nearly 15% of its value the next day. And look, the market's reaction wasn't just harsh, it was also confusing. Veeva actually delivered a 3-cent earnings beat off a 20-cent basis, higher than expected revenue, up nearly 27% year over year. Plus, management raised their full-year sales and earnings forecast. So how does the stock get obliterated after a beat and raise like that? In the case of Veeva, I think it has a lot to do with the simple fact the stock had already run dramatically going into the quarter. Even after Friday's decline, it's still up roughly 40% year to date. One of the reasons why we've been behind it. On top of that, Veeva's had such a good track record lately that I think maybe investors were spoiled. So should we be concerned about this story? Or are we getting a rare pullback in a high-quality stock? Let's take a closer look with Peter Gassner. He's the founder and CEO of Veeva Systems. Hear more about the quarter's company's prospects. Mr. Gassner, welcome back to Mad Money.
Thanks, Jim. Glad to be here.
All right, Peter, I got a tale of two cities going here. I got Deutsche Bank saying, whoa, be careful. Deceleration in subscription revenue growth to 28%. Revenues and billings guide fell below expectations. Admission of competition from rival IMS. I got JP Morgan right on top of that saying stronger than expected forecasts, new products, strong momentum, fantastic customer relations, and 3 huge deals just signed. Will you please help me here? I mean, can both of these be right?
Well, Jim, I guess variety is the spice of life, right? So we want a little bit of that. But I mean, generally, what we're focused on really is the long term, the basics, growing the top line of the company, the bottom line of the company. That's something we've done every quarter since we've been public. Last quarter was a good quarter. It was 31% operating margin, 26% subscription growth. So those are really the things we're focused on. I guess big picture, we think we can develop here one of the few multi-billion-dollar profitable cloud companies over time, and that's just take hard work every quarter, Jim.
All right, so Peter, why suddenly do we have to hear about competitors? Medidata, we've had them on. IMS, haven't had them. But, I mean, they came up. I mean, is that something? I've not heard competitors come up in your conference call before.
Well, we're getting relatively broad, Jim. If you look at Veeva now, we have a lot of products, right? In the clinical area, the quality, the regulatory, the commercial area. So you're going to, bump into some competitors, and that's probably good for the market. So Medidata would come up in the context of the clinical area, one of our areas. So we've planted the seeds for these new product lines, got some early customers in the CTMS and EDC, and that's why probably Medidata comes up. But when you look at what Veeva customers really appreciate from us, it's that we have multiple products across multiple areas, all on one cloud platform. So it fits together, it makes it easy, and that's what they really look to for Veeva. That's what they look to us for.
All right, now I thought it was surprising. I'm going through the conference call. Suddenly I hear 2 large chemical companies, consumer products goods company, industrial contract. I have long hoped that your fantastic, rigorous software would begin to help other silos. How is this happening?
Well, it's happening in what we call the Veeva way, Jim. It's the same as what we do inside of life sciences. We make a really good product for a targeted area. We get some customers. We get them live, get them happy, improve the product, and we do reference selling. Now we're starting to do that outside of life sciences with our Quality One product. It's for the quality processes. Boy, you need those in cosmetics companies, chemical companies, food companies, industrial manufacturing. You have these quality processes, and we have an offering for them now, and we're just starting to get traction out there. So it's pretty exciting times.
Well, I'm glad you mentioned that because you get a company like IFF or you get a company like DuPont, Dow Chemical. These are all companies that have something in common. They're doing biologicals. They're doing things that we actually end up eating that we think are good for ourselves. Or they do things that basically have claims that have to be protected and claims that actually have to hold up under government scrutiny. Is that the kind of line extension that we're thinking about?
Well, we're talking about health and human safety, absolutely, but we're also talking about quality as it refers to the brand reputation, right? Critically important. And not only that, and what's really driving the interest in Veeva, because we have a true cloud software in our Quality One, these manufacturers, they have to involve their suppliers. And the only way to do that is through a cloud-based system, and there just isn't one available. we're going to serve this underserved market. Jim, it reminds me of what ServiceNow did when they really started focusing on IT operations, really bringing a cloud solution to there, and all of a sudden you've got a big market. That's what we're trying to do with Quality One. There's a big pent-up demand there, and I think we're uncovering it.
Well, that's great, because, we went hard on ServiceNow the moment that they did that. And if you can do the same thing, I mean, it becomes, it's one company when you look at it in just the health sciences. It's another when you go as broad as you're thinking. Peter, I like everything I heard today, and I had a feeling that these people who have some negative things to say, they're not thinking big enough. You are, I am. Thank you, Peter Gassner, founder and CEO of Veeva Systems. Great to talk to you, sir.
Thanks, Jim.
Okay, this is one of those that's come down. There's people who don't believe. You either believe or don't, but at least I've done the homework, and to me it says there's a lot to this story. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.